Hi there, good morning. You're watching Market Cafe on ET Now with me, Snehisha, and with me is Shreyansi Singh. And well, we're making merry in the studio, Shreyansi, wishing all our viewers Merry Christmas. And very shortly, we'll be ringing in the New Year. Well, Shreyansi, I am very excited about the New Year, and I hope you are too as well, right?
Absolutely.
Because we've seen so much volatility this year, so let's hope for the market we can see some stability coming in for the New Year. And well, with that, let's kickstart the show then. Here's once again wishing all our viewers a very Merry Christmas. With that, Shreyansi, take us through what oil has been doing. Oil has been seeing, well, a lot of action when we talk about the Houthi attacks in the Red Sea, and all of that is affecting oil prices. So tell us in detail what's happening.
Absolutely. So Santa's tinge of red was definitely seen on, in the oil markets. And if you look at oil prices, they eased on Friday ahead of the long Christmas holiday weekend on expectations that Angola could increase output after leaving OPEC, but rose for the week on positive US economic news, as well as worries that Houthi ship attacks would boost supply costs. Now, both benchmarks were up about 3% for the week after gaining less than 1% last week. And in the Middle East, more maritime carriers said that they were avoiding the Red Sea due to attacks on vessels carried out by Iranian-backed Houthi militant group, which says it is responding to Israel's war in Gaza. Now, the attacks have caused disruptions through the Suez Canal, which handles about 12% of world trade. In Africa also, you did have Angola's decision to leave the Organization of Petroleum Exporting Countries plus allies, opening up the way for Beijing to increase investment in the country's oil and other sectors. So the country, of course, produces about 1.1 million barrels per day of oil. And in Iraq, you did have the oil ministry spokesman Asim Jihad affirming that Iraq's support for the OPEC Plus agreement, as well as its commitment to voluntary oil cuts. So that is largely the move coming in for oil prices.
Well, absolutely, and let's talk about oil and let's keep it with those shipping companies, and let's talk about Maersk, because shipping giant Maersk, the second biggest shipping company in the world, is preparing to resume operations in the Red Sea and the Gulf of Aden. Well, that's the word we're getting in. The company is citing deployment of a US-led military operation designed to ensure safety of commerce in that region.
Well, absolutely. And when you look at the events to look out for, on December 29th, you've got the Q3 BOP current account November fiscal deficit, as well as monthly and weekly expiry, of course. Now, in terms of other global cues for December 27th, you do have the US initial jobless claims data. And in terms of cues coming out of China, on December 27th, there is industrial profits. On December 29th, there's Q3 BOP current account data coming in. Now, in terms of corporate action, of course, you've got on December 26th Vedanta, and it's the last day to be eligible for interim dividend for that particular counter, so that will remain in focus. And so will Adani Green on that day, because they'd be considering a proposal for fundraise. So on account of that, that particular counter will remain in focus. In terms of lock-in period ending, you've got a host of counters. So you've got Signature Global, Sai Silks, as well as Yatra Online. So all of these counters, on account of lock-in period ending, will be in the spotlight. Now, when you look at the counters that are considering fundraise on December 27th, you do have South Indian Bank and you have Ugrow Capital. So those two counters will remain in focus, and so will JSW Infra as well as Manoj Vaibhav Gems. After that lock-in period ends for them, Gandhar Oil as well. In terms of other corporate action on December 28th, you do have Pasolo Digital, they're mulling a fundraise, and Canfin Homes, of course, the last day to buy to be eligible for dividend for that particular counter. So that will remain in focus. Now, in terms of lock-in period ending on December 28th, you've got Fedbank Financial, Flair Writing, and Updater Services on December 29th. So all of those counters will remain in the spotlight. Muthoot Microfinance, Moti Sons Jewelers, Suraj Estate Developers will be listing on December 26th. So those counters will remain in focus. And in terms of IPO action, of course, you have Innova CapTab. It's the last day to subscribe to the IPO. On that particular day, that will also remain in focus. Now, when you look at Happy Forgings or RBZ Jewelers, as well as Credo Brands, that particular counter will be listing on December 27th with all of those other two counters. So these three counters will be remaining in focus. There's a host of primary market action that we've seen in the week gone by. And we do hope we're going to be seeing all of that primary action in this week as well. And on December 28th, in that light, you do have listing of Azad Engineering. So do keep an eye on that one as well.
Well, that's a long list of cues to watch out for this week. I believe we're in the sluggish period between Christmas and New Year, but nonetheless, lots of cues to watch out for. So keep an eye out of all of these cues as well. Moving on, then let's look at some macro news. And Bank of Japan Governor Kazuo Ueda said that the central bank will be likely considering changing policy stance if prospects of sustainability achieving its 2% target increase sufficiently. He also adds that the economic situation across the world, the policy change is yet to be decided.
And the war against Gaza is far from over, and this is the reiteration coming from Israeli PM Benjamin Netanyahu, dismissing all media speculations around a halt. Meanwhile, according to the Gaza Health Ministry, about 250 Palestinians have been killed and 500 injured in the past 24 hours. Number of trucks carrying aid into Gaza still not enough to meet the humanitarian needs of the people.
Well, staying with the Israel-Gaza war, on the occasion of Christmas, Pope Francis has gone ahead and called for the end of the war in Gaza, while also for more aid into the region to solve a desperate humanitarian situation. In his traditional Christmas message to the people, he also asked for the freedom of hostages held by Hamas. Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. This is ET Now. Let's take stock of the Asian Pacific markets. Well, they were subdued on Tuesday, that's today morning, with Japan opening flat, but still set to wrap up the year as one of the region's top performers. Now, the Nikkei 225, that's the index we're talking about, was set to end the year with gains of over 27%, making it one of Asia's top gainers in 2024. On your screen, you can see Nikkei. Nikkei is very marginally in the red, not doing much, as flat as it can be as we speak. Now, shifting focus then, several markets including Australia, New Zealand and Hong Kong are shut on account of Boxing Day. Mind you, they were shut yesterday as well on account of Christmas. So the rates that you are seeing are from last week. Kospi, however, Kospi is active in trade as we speak and is down 0.1%, not doing much. Well, so those that's the moves coming in on the Asian market this morning. Hang Seng also from a previous day down 1.7%, but on account of Boxing Day, Hang Seng is shut today. On that note, let's also take stock of how the Indian markets have performed. And well, when we closed on Friday, we closed just below that 21,350 mark. Implied open showing 21,422. So well, we can hope for a good day in trade today, but let's see how that pans out for us this morning.
Absolutely, and let's also switch focus to what's on SEBI's agenda in 2024. Now, the market regulator has indicated that major reforms in the financial market are likely. In this report, ET Now's Ankur Mishra talks about important regulatory changes SEBI is likely to take in the year 2024. Take a look.
If 2023 was a year of changes with reduction in IPO listing timeline to 3 days, T+1 settlement, 2024 is going to take a giant leap in terms of market regulations. And the regulator has planned the biggest of all changes in terms of instantaneous settlement, which will allow trade as well as settlement in just one click or one touch on your mobile. Instantaneous settlement of trades is going to be the biggest reform of the sector in 2024. SEBI chairperson Madhvi Puri Buch has said that instantaneous settlement is possible within a year of T+0 implementation. This means trades will be settled on the same day by March 2024. As of now, the settlement of trade happens on a T+1 basis. Not only instantaneous settlement, but market regulator is also keen on flexibility, safety and choice of investors, and hence in 2024 you will see ESBA-like facility for secondary market and also demat nominee changes which will come into effect. ESBA-like facility is likely to be implemented for the secondary market. Currently, it is available only for primary markets. It will safeguard investor assets from misuse by brokers, default, and consequent risk to their capital. Also from 1st of January, nominee in Demat accounts is mandatory. All Demat accounts will have to furnish nomination or opt out of nomination by January 1st, 2024. Otherwise, their account will be blocked for trading. In 2024, market regulator may also take measures to regulate finfluencers, appoint more financial intermediaries, and make amendments in delisting norms.
Hi there, welcome back and thanks so much for staying tuned to Market Cafe. This is ET Now. Now, as we head into a new year, let's take stock of how stocks and indices move in the month of January usually. My colleague Somit is standing by with some interesting data collated over the years. Take it away, Somit.
Well, if you see, January has not always been a good month for Indian benchmark indices. At least that's what the seasonality is suggesting us. Firstly, in the stock specific, if you see, Religare is the only stock that has declined for the last 10 consecutive calendar years in the month of January, and with an average decline of around 11%. Another stock that is worth mentioning is Engineers India, because that stock has declined around 9 times out of the last 10 calendar years in the month of January, with an average decline of close to 8.5%. Moving on to the headline indices, if you see, the Nifty index has declined nearly 7 out of the 10 times in the last 10 Januaries, while the mid cap and the small cap, which is the broader indices, have declined around 6 times out of the last 10 Januaries. Now, if you see sector wise, Nifty Metal has 80% of the time has a bad January, around 8 times declined. Nifty Realty, Pharma, PSU Bank indices have declined around 7 out of the last 10 Januaries. While when it comes to the Nifty Bank, Nifty Energy, Nifty FMCG and Nifty Auto, it has been around 50%. 5 times they have declined, while 5 times they have managed to gain. While Nifty IT index, January has most likely been a good month for the Nifty IT index. It has declined only 2 times, while for the remaining 8 times it has managed to report gains. Again, some stock specific action that we have seen. Now, these stocks have continuously declined for the last 5 consecutive Januaries. That is Indiabulls Housing, Z Entertainment, Glenmark Pharma, IndusInd Bank. Anywhere the average decline has been anywhere between 8 to 12%. For AB Capital, Gujarat Pipavav, JSW Steel and HDFC AMC, again the decline has been anywhere between 7 to 8%. And then there is Kansai Nerolac, Cochin Shipyard and Star Cement, which have reported a decline anywhere between 5 to 7%. There's also Shipping Corp, which has declined around 7% in the month of January, and that has been for the last 5 consecutive years that we have been seeing. So keep an eye out for the indices and stock, because in just few days we'll be starting a new calendar year.
Absolutely, Somit. So we'll definitely be keeping an eye on all of those counters. But let's switch focus to India's first EV company to file for an IPO. And Ola Electric has filed for an IPO, and they're seeking to raise about 5,500 crores via fresh issue. My colleague Srishti Sharma is standing by with more details. Srishti?
Well, yes, Ola Electric IPO is finally through. The company has gone ahead and filed the DRHP with SEBI, wherein this IPO is going to be a mix of an OFS as well as a fresh issue. Do remember that this is going to be the first IPO from an auto major to come out in the last 20 years. And this is the first IPO being the pure play EV company to hit the markets. Talking about this IPO, it's going to be a 5,500 crores of fresh issue. Other than that, the promoters and investors are also looking to offload some of their stake, and this could be as much as 9.5 crore shares. When promoter Bhavesh Agrawal will be looking to offload 4.7 crore shares, and SPF2 Ostrich is looking to offload 2.4 crore shares. Now, about the fresh issue of 5,500 crores, where the company will utilize their money. So as we know that the company has a self-manufacturing plant that is upcoming, they're going to be utilizing 1,226 crores out of the 5,500 crores for the expansion of this plant. Another 800 crores is what they plan to utilize for the repayment of debt of some of their subsidiaries. 1,600 crores is what the company intends to invest into R&D, and 350 crores they will be setting aside for the organic growth initiatives. Now, talking about the financials, as we know that Ola Electric is one of the leaders in the two-wheeler EV segment, But when it comes to the top line, indeed there is a growth, but the bottom line is under pressure as the company reported 1,472 crores of loss in FY23, and this number is 267 crores in Q1 FY24. But the gross margin has seen an improvement from negative 5.4% in FY22. This number has seen an improvement to 13.73%. Other than that, if we compare with rest of the peers, since the bottom line is in the red, so the EPS is actually negative. But all eyes on Ola Electric. These are the details of the DRHP filed at SEBI.
Alright, all eyes will be on Ola Electric on the back of that IPO. But moving on, big boy Reliance Industries and Walt Disney have signed a non-binding term sheet, marking a go-ahead in what will further plan for creating India's largest media and entertainment business. This is, of course, according to an Economic Times report. The 51-49 stock and cash merger in favor of Mukesh Ambani-led Reliance is expected to be completed by February, even as some say that the company is keen on completing the deal by January itself. Now, sources have told the Economic Times that the current plan is to create a subsidiary of Reliance's Viacom 18, which will then absorb Star India via a stock swap. Do remember, the two sides are also negotiating a plan to inject cash as immediate capital investment, which is expected to be anywhere between $1 to $1.5 billion.
Well, let's also take a look at Paytm then, and Paytm will definitely remain in the spotlight on the back of news that the company has laid off over 1,000 employees, citing efforts to cut costs as it realigns its businesses. Now, my colleague Sumita Karir is joining in on the phone line with more details.
Right, so not such good news really coming out of Paytm, which is undergoing another restructuring exercise, and this is happening across multiple verticals. So you have the wealth vertical, the payments vertical, the insurance vertical as well. In fact, sources tell ET now that these layoffs or this exercise to reduce costs will very well extend into the next 2-3 months as well. This is remember happening amidst an AI boom, which is very, very significant and important to note. Remember, founder and CEO Vijay Shekhar Sharma has spoken about making Paytm an AI first company, and a mention of AI juxtaposed with these job cuts is also something that's mentioned in the statement that we received. Paytm says, and I quote, "We're transforming our operations with AI-powered automation to drive efficiency, eliminating repetitive tasks and roles to drive efficacy across growth and costs, resulting in a slight reduction in our workforce in operations and marketing. We will be able to save 10 to 15% in employee costs as AI has delivered more than expected. Additionally, we constantly evaluate cases of non-performance throughout the year." So one strong point coming out, that is of AI, and of course, the other strong point is about cases of non-performance throughout the year. In fact, Paytm goes on to say that they will see a manpower increase of 15,000 more in the coming year, which basically means that more hirings will also take place, and it will be focusing on further expansion of payments, of its insurance and wealth platforms, considering the huge pool of young investors that are now warming up to the idea of investing. Now, Paytm also says that the focus, like I said, will be on all of these platforms, plus its distribution-based business model in loan distribution as well to drive scale and, of course, operating profits. This, remember, is happening after Paytm scaled back from small ticket-sized consumer loans after a regulatory clampdown on unsecured loans by RBI. And, of course, it also stated that in an analyst meet that happened about 10 to 15 days back, that the focus will now be on big ticket size personal loans. As far as layoffs are concerned, well, this year has been about layoffs on of course pruning, and job cuts have been really have made it to headlines almost every other month. They've been pervasive across startups on the back of high interest rates, and this has been a year truly where profitability over growth has reigned supreme.
Well, thanks, Sumita, for all of those details. Paytm will be in focus on the back of those layoffs, but another stock that will be in focus today is Polycab. This is after the stock fell over 5% on Friday. This is following searches conducted by the Income Tax Department at nearly 50 locations. Now, according to reports, the residences and offices of the top management were also subject to searches. The reason behind the conducted raids still remains unknown.
Meanwhile, let's also take a look at the growth estimates coming in. Credit rating firm Fitch Ratings expects India's robust economic growth to stimulate corporate demand. Now, the report alludes to the resilient performances from India Inc. in 2023, counteracting any weaknesses stemming from slowing growth in key international markets. Fitch predicts that increased demand and a reduction in input costs will contribute to enhanced profit margins for corporates in the upcoming fiscal year. And the agency also maintains that there's optimism over India's position as one of the fastest growing countries, projecting GDP growth of 6.5% for fiscal 2024 to 25.
Well, and as we step closer towards the new year 2024, let's get a sense of what market gurus like Ramesh Damani, Mahesh Nandurkar and Sailesh Bhan think of the PSU sector going ahead. Listen in.
I bought in fact, all the defense companies. I think some of them are extraordinary businesses and they continue to do well. And what's happened is that we've gone from importing a lot of the stuff to making the stuff ourselves. And now we're exporting it. Look at the number of orders that, say, a company like Bharat Dynamics is getting or Hindustan Aeronautics is getting. It's extraordinary, the shift that has taken place. So I think if you ask me within the PSU sector, where is the leadership? I would say it's in the defense.
Many of the state-owned companies appear reasonably attractive on valuations despite the recent rally that we have seen, especially on the mining side, the power utility side, and there are a few other subsegments which look reasonably interesting. One could argue that possibly some of the other PSU names on the defense side and some of the other segments are not that cheap anymore. But yes, one segment of the state-owned companies still appears, quite reasonably attractively priced at this point in time.
In PSUs also, there are certain categories of businesses which still have the right to win, those with extremely dominant market share or extremely monopolistic kind of business designs which exist, right? I mean, so there are certainly right to win and certainly there is an opportunity there. Unfortunately or fortunately, the way the market behaves is, everything gets related equally. I mean, it's now more a PSU sector rather than a sector with this quality of a business or this ROE businesses. I think select banks in public sector still have material value versus where the market stands. And that is one space which we find interesting within the whole public sector pack, which is there. Public sector banks, the growth is still not there and it's likely to come in the next, 2 or 3 years.
Well, with this, we're timed out on this segment, but we'll see you with more stock-specific news on the other side.
Hi there, welcome back. Now let's talk about what the FNO snapshot looks like for today, and for that I'm joined in the studio by my colleague Ansh. Ansh, well, we continue to scale new highs, certain kinks in the way of course, but what are the levels that we should be watching out for?
Yes, talking about the levels, let's get the chart as well on the screen. Nifty seems to be trading back in the upper range of 21,250 to 21,500 level. Let's see what happened in FNO segment. In Nifty Futures, we saw open interest falling by around 9%, indicating short covering, whereas on option front, we are seeing very active call writing at 21,500, where Nifty may take resistance. Remember, this is the same level which we saw in the chart as well of 21,500 on the upside. While on the downside, we saw active put writing at 21,300, indicating some support around this level, 21,250, 300. Let's have a quick view on Nifty Bank as well. Index continues to trade within the thick range of around 1,500 points, within which it has been hovering from last 14 to 15 session. This range is 46,700 to 48,200 actually. In Nifty Bank Futures, we saw open interest declining by 17%, indicating long unwinding. So here we saw long getting covered. Whereas on index options, we are seeing very active call writing at 48,100 mark, indicating resistance around this level. Remember, the upper band of the chart as well is around this level only at 48,100, 48,200. Whereas on downside, we saw very active call put covering at 47,000 level. Shifting our focus to what FIS did, we saw long getting covered by around 800, 900 contracts. Also shorts getting added by 4,200 contracts. So we are seeing a pressure on downside by around 5,000 contracts, due to which the total long position has slipped from 66.6% to 65.5%. So in a nutshell, market looks a bit cautious and consolidation in the range. Also, we had a long weekend, so whether Santa is sleeping or awake, only today's session can give us some idea about it.
Well, absolutely. So only today's session can give us an idea about it. But there's one more thing that we need more clarity on. Which are the stocks that are likely to remain in focus according to your list?
Yes. So Aurobindo Pharma will be the first stock in focus for today's trading session, as US FDA had conducted a pre-approval inspection at the company's injectable manufacturing facility between December 11th and 22nd. The inspection concluded with 10 observations, which is a bit of a negative sign for the company. Apart from this, Adani Green will also be in focus, as company concludes a power purchase agreement for the entire 8,000 megawatt manufacturing linked SECI tender. The final PPA for the supply is of 1,799 of solar power for a period of 25 years. KPI Tech will also be in focus, as company acquired 13% shareholding in Ndream AG, a cloud-based gaming aggregation platform company which is based in Switzerland actually. Zydus Life will also be in focus, as US FDA had completed inspection at company's API site in Hyderabad with 6 observations. Again, this is also a bit of a negative sign for the company. PNC Infra is also in focus, as company achieves financial closure for a highway project being implemented through a National Highway Division of UPPWD. The bid project cost is around 820 crore. Lastly, Jindal Steel and Power will be in focus, as company has entered into an MOU with Rashtriya Ispat Nigam Limited, which is a RINL, for the operationalization of RINL's blast furnace. So keep an eye on the stocks.
Well, thanks Anant so much for taking us through that. A whole host of counters in focus today, but another stock that will be in focus is UPL, because the board has approved a 4,200 crore rights issue. So what does this mean for the company going ahead? My colleague Ashesha is joining in with all of that. Ashesha, over to you. Well, yes, so the board of UPL has approved fundraise via rights issue to the tune of about 4,200 crores. About 1,350 crores will come in via promoter contribution, and the balance will be from other public shareholders. Remember, at the end of the second quarter, management did highlight that they are looking to reduce their debt by as much as $500 million by the end of the fourth quarter FY23 versus last year, which translates to about 4,200 crores. And if the company indeed looks to reduce their debt by the proceeds of this rights issue, then their gross debt could come down by as much as 12%. It currently stands at about 35,000 odd crores, and it could decline by as much as 12 odd percent. Remember, they also went ahead and reduced their guidance for FY24 at the end of second quarter, where they said that revenue growth could be flat in the second quarter FY24, while EBITDA growth could be flat to negative 5% in the second quarter. And remember, the stock has been an underperformer on a year-to-date basis at a time when Nifty 50 has risen by as much as 18%, UPL is down 19%, rising debt levels, guidance cut by the management for FY24 are some of the reasons why the stock has underperformed on a year-to-date basis. Today, of course, on the back of this 4,200 crore rights issue that the company has approved, the stock will be in focus.
Well, absolutely. So UPL will be in focus. Thank you so much for that roundup, Ashesha. But let's also take a look at Anant Raj, and that one is in the spotlight on the back of their residential as well as commercial segments. Mamakshi is standing by with all of the information on their launches and projects. Mamakshi, good morning. Take it away.
Well, yes, Anant Raj is going to be in focus today, and that is because the company has come out with some sort of commentary on all of their segments. Let's first look at the residential segment. Now, the company has highlighted that the demand has largely outpaced the supply, and in fact, they have nearly 167 acres of land in the Gurugram region. And in fact, Anant Raj Estate, which is one of their projects, nearly 1.47 million square feet of projects are expected to be completed by FY28. As far as the Ashok Estate is concerned, the current price is at 2.5 lakh per square yard as against the launch price of 1.75 lakh per square yard, and in fact this project is also expected to be completed by December 2025. Estate residences, well, they believe that premium 4 and 5 BHK ultra luxury apartments, 250 units are actually expected to be launched in the first phase. And as far as Birla Navya is concerned, which is a 50-50 JV with Birla Estates, they have highlighted that the development of 764 luxury floors built will be built, and in fact the township could be launched across 4 phases. Now, as far as the commercial business is concerned, they have highlighted that they do have a well diversified commercial portfolio, and in fact this portfolio provides stable cash flows to the company. Lastly, we're also focusing on the data centers, which is an upcoming business for them. They're expecting some strong growth out here. They have highlighted that this is a multi-year mega opportunity. Rising data consumption coupled with data localization law could fuel rapid demand, and in fact the data center capacity overall is expected to grow at a CAGR of almost 38% from FY22 to 26. So largely on the back of these comments that came through for Anant Raj, keep an eye out on this counter.
Right, Vamakshi, thanks so much for taking us through that. Anant Raj, we'll be keeping our eye on that counter today. But while you're with us, I believe we have some notes coming in from brokerages this morning. So what are the stocks that they're flagging off for us?
Well, yes, let's first start off with India Mart Intermesh. We have a note coming in from Equirus, and they have highlighted that the company's long-term growth prospects are quite solid. In fact, they're expecting 17% revenue and nearly 22% EBITDA CAGR from FY23 to 28. They believe largely this growth will be aided by efficiencies in sales as well as economies of scale. Apart from that, investment income, commerce enablement could actually provide value creation beyond the core business of the company. So given all of these factors, we have Equirus initiating coverage on India Mart Intermesh with a long rating. Apart from that, also watch out for oil and gas. We have a note coming in from MK. They have highlighted that despite their strong stock run-up, the valuations for these counters are quite inexpensive. Steady production growth does persist for Oil India, and in fact on the back of that they have actually maintained a buy rating on ONGC and Oil India, but key to note that they've gone ahead and increased the target price on both of these counters. Lastly, let's also focus in on J Kumar Infra. We have a note coming in from CLSA. They have highlighted that this stock could be an inexpensive play on high growth urbanization capex with a foothold in metro rail. 2024 should begin well ideally for this company. They have a nearly 2 billion order backlog which could benefit the company. Other than that, they've also mentioned that the company is well placed with a nearly 2 times growth in the top line. So given all of those factors, J Kumar Infra in focus because CLSA has maintained its buy rating and significantly hiked its target price from 385 earlier to 720 rupees per share.
Well, absolutely. Thanks, Vamakshi. So we'll keep an eye on J Kumar Infra, but all eyes will be on the 3 IPOs that are set to make a debut on D Street today. You've got Muthoot Microfinance, Moti Sons Jewelers, as well as Suraj Estate Developers. My colleague Sharad is standing by with more details on those. Sharad?
Well, yes, this is the last week of trading in this year, and the next 4 days, 8 IPO listings would be there, and out of which 3 IPO listings will be coming today. Of course, a strong retail interest is also there as indicated in the grey market premiums. Muthoot Microfinance listing today, IPO price was 291 rupees per share. Overall subscription, if you look at it, it was around roughly 12 times, and the grey market premium is indicating roughly 10 to 15% premium on listing. So we can expect a decent type of listing coming in. Apart from this, Moti Sons Jewelers would be in focus. IPO price is roughly 55 rupees per share. The subscription numbers have been very high, almost 173 times, and the grey market premium is indicating more than 100% returns expected on listings, and is expected that there would be a strong positive listing. The third company in focus would be Suraj Estate Developers, where the IPO price was coming at 360 rupees per share, when the subscription coming in is almost 17 times. Now it's expected that it would be a flattish to mild listing of roughly 0 to 5% when it comes to the premiums. So overall we can expect 2 decent or mild listings and a very strong listing coming in from Moti Sons Jewelers. So this is what the entire take is coming in for the 3 listings today.
Sharad, thanks so much for taking us through that. We will be keeping our eye out on all of these 3 IPOs hitting D Street today. But with that, I'm afraid we're completely timed out on this edition of Market Cafe. From me, Snehi, my co-anchor Shreyansi, and the team that put together, thanks so much for watching. But stay tuned because the market will take all the action ahead.